The American stock market serves as a vital barometer for the overall health and direction of the economy. Regularly influencing investment decisions and consumer confidence, the stock market reflects market participants' expectations about the future. This video examines recent trends in the American stock market, exploring various factors that have shaped its trajectory, the impact of major events, and potential future implications. One of the most significant trends observed in the American stock market over the past decade has been the rise of technology stocks. Companies in the technology sector, such as Apple, Amazon, and Microsoft, have taken center stage, driving substantial market gains. By 2023, technology stocks had continued to outperform many other sectors, propelled by advances in digitalization, cloud computing, and artificial intelligence. This shift emphasizes a growing reliance on technology in everyday life, accelerated by the COVID-19 pandemic, which thrust remote work and online shopping into the mainstream. Another important trend has been the increasing participation of retail investors in the stock market. Platforms like Robinhood made trading accessible for individuals, leading to a surge in new accounts during the pandemic. Retail investors played a crucial role in recent market movements, especially during the meme stock phenomenon, where stocks like GameStop and AMC Entertainment surged due to coordinated buying efforts on social media platforms. This shift has not only altered traditional investment paradigms but also drawn attention from regulators regarding market manipulation and the responsibilities of brokerage firms. The effects of monetary policy on the stock market cannot be overstated. The U.S. Federal Reserve's response to the economic downturn caused by the pandemic significantly influenced market dynamics. Initially, ultra-low interest rates and massive quantitative easing helped to provide liquidity and stabilize the economy. These measures contributed to a bullish market trend, as low borrowing costs encouraged investments. Recently, the Fed began signaling the possibility of interest rate hikes to combat rising inflation, causing fluctuations in stock prices. Investors are closely monitoring these developments, as changes in interest rates can impact borrowing costs for corporations, potentially slowing growth and affecting stock valuations. Inflation has emerged as a major concern for investors in 2023. After years of low inflation, the economy faced rising prices for various goods and services, driven by supply chain disruptions and increased demand post-pandemic. Higher inflation can erode corporate profits, leading to reduced earnings forecasts and lower stock prices. As a result, certain sectors, especially those reliant on consumer discretionary spending, experienced increased volatility. Investors are now weighing the potential for sustained inflation against historical trends, which will likely influence their strategies moving forward. International factors also play a critical role in shaping the American stock market. Global events such as geopolitical tensions and trade relationships can impact investor sentiment and stock valuations. For example, ongoing supply chain issues stemming from conflicts and trade disputes can affect American companies' operations and profitability. Additionally, concerns about international instability can lead to a flight to safety, where investors shift capital toward more stable assets. As the world becomes increasingly interconnected, the American stock market remains susceptible to developments abroad. Moreover, environmental, social, and governance (ESG) factors have gained prominence in recent years. Investors are increasingly considering a company's commitment to sustainability and ethical practices when making investment decisions. The integration of ESG criteria reflects a broader societal shift towards responsible investing and can influence stock prices. Companies demonstrating strong ESG credentials may see enhanced investor interest, while those overlooking these aspects could face reputational risks and declining market performance. This trend indicates a deepening relationship between corporate behavior and investor sentiment in the American stock market. Looking ahead, the American stock market faces several challenges and opportunities. As technological advancement continues, investors must remain vigilant about valuations, particularly in sectors that have experienced rapid growth. Disruptive innovations may provide notable investment opportunities, but they also carry inherent risks. Additionally, the market must navigate the uncertainties surrounding inflation, interest rates, and potential economic slowdowns. Strategic investments that consider long-term growth versus short-term fluctuations will be crucial for resilience. The American stock market is also likely to experience continued volatility influenced by external factors such as political developments, environmental changes, and evolving social norms. The ongoing discourse around regulatory changes, particularly concerning the financial industry and technology companies, may create uncertainty for investors. As regulators seek to address issues such as data privacy and market integrity, companies that proactively adapt to these changes could gain a competitive advantage. The trends in the American stock market reflect a complex interplay of technology, retail investor behavior, monetary policy, inflation concerns, and international dynamics. As the landscape of investing evolves, individuals and institutions alike must adapt their strategies to navigate the ever-changing environment. The interplay of new market participants, technological advancements, and broader economic factors presents both challenges and opportunities. By remaining informed and agile, investors can better position themselves to thrive in the context of these trends, thus contributing to the resilience and growth of the American stock market in the years to come. The future, while uncertain, holds the potential for exciting developments that could reshape behaviors, and the impact of technology on stock trading cannot be overlooked. The rise of online trading platforms has democratized access to the stock market. Retail investors now account for a significant portion of trading volume. During the pandemic, platforms like Robinhood popularized commission-free trading, attracting a younger demographic eager to engage in stock market investments. The phenomenon of meme stocks, characterized by stocks whose prices rise significantly due to social media hype rather than fundamental business performance, exemplifies the power of retail investors. GameStop and AMC are fitting examples. Their stock prices surged due to collective retail buying, showing that investor psychology can influence market trends dramatically. This influx of retail investors has led to market fluctuations that can defy traditional valuation metrics. Institutional investors often take longer-term approaches to investment, leveraging analyses based on fundamentals. In contrast, retail investors can react quickly to news and social media trends, resulting in rapid price movements. This behavioral shift affects overall market stability and introduces more volatility, challenging traditional investment strategies. As we look to the future, several implications arise from current trends in the American stock market. Firstly, the uncertainty over inflation and monetary policy is likely to continue influencing investor sentiment. There may be further sector rotations as investors react to changing economic indicators. For instance, if inflation remains persistent, sectors considered defensive, such as consumer staples and utilities, may draw increased investment, while growth sectors face pressure. Secondly, given the ongoing developments and innovations within technology and clean energy, it is reasonable to expect these sectors to play pivotal roles in shaping the market landscape. Investors should watch how advancements in automation, artificial intelligence, biotechnology, and energy transition are likely to create new opportunities and challenges. Additionally, regulatory frameworks will play a crucial role in determining how these sectors evolve. For example, supportive legislation for clean energy could provide significant momentum for growth. Lastly, the continuing engagement of retail investors in the stock market signals a fundamental shift in how trading happens. This involvement could lead to more discussions about investor education and the need for safeguarding practices. Regulatory bodies may seek to implement measures to protect retail investors from market volatility driven by speculative trading practices. In conclusion, the American stock market is characterized by a complex interplay of economic factors, sector performance, and investor behavior. Current trends highlight challenges such as inflation and changing monetary policy, particularly affecting technology and growth stocks. Conversely, sectors like green energy are experiencing growth, driven by societal and governmental shifts towards sustainability. Lastly, the rise of retail investing fundamentally alters market dynamics, prompting a re-evaluation of investment strategies and regulatory practices. Understanding these trends is essential for investors seeking to navigate an ever-evolving economic landscape. If you found this helpful, don't forget to like, subscribe, and hit the bell so you never miss a money tip. Drop a comment below with your thoughts or questions. I'd love to hear from you. Until next time, stay smart, stay savvy, and keep building your financial future.